And then you get others who just wait and wait and wait and wait until the right deal hits their inbox, which matches exactly what their buy box suggests. So, buyers are complex, but, the good news is it's a dynamic marketplace. And so what we've built is in the AI front, just to sort of tap into that topic, is we've built a matching engine. And the good thing about the matching engine is instead of taking into consideration, although it does take this into consideration, instead of taking into consideration just somebody's buy box and what they specifically say, it takes into consideration their behaviors that they exhibit on the platform, which are often different to what they say they're going to do. And then it also matches them up with other buyers who have exhibited similar behaviors. And then it infers that they will do something similar to what that person is going to do or did prior. And so we're doing 425,000 programmatic matches a week.
That's crazy.
So that level of scale enables us to match and find relevant buyers for people who are looking to exit. And that's exactly what people who are looking to exit are looking for.
This definitely presents lots of opportunities for buyers. Welcome to the Growth Blueprint, the podcast where B2B executives get the insights they need to scale profitable companies. I'm your host, Mario Peshev, analyzing data from over 500 portfolio companies, interviewing top B2B experts, and writing the new playbooks that work. If you're a B2B leader looking to drive growth and operational efficiency, you're in the right place. No fluff, just data-driven insights, expert advice you can act on today. Hit subscribe, stay tuned, let's dive in. Hey everyone, this is the B2B Growth Hacking Playbook. My name is Mario Peshev, and today I have one of my favorite people on the planet here, Blake Hutchison, the CEO of Flippa. Hey Blake, it's always great seeing you. How are you doing today?
Very well, thank you, Mario. It's great to see you again. We haven't spoken for a while, so thank you for having me on the show.
So for anyone who's not familiar with Blake, for whatever reason, if you're living under a rock and not really spending any time on the internet, again, Blake is the CEO of Flippa. Flippa is the largest digital and not just digital acquisition marketplace on the planet with, I believe, over 450,000 deals already closed on the platform. Really AI heavy nowadays, very data backed and data driven. And as someone who's super passionate about data, I love that. That's kind of one of my favorite things out there. As if you've been following the podcast lately, you know that I'm not just featuring like sponsored guests or anything. I've been on the platform. I just checked that a bit earlier from ever since August 2012. So it's been over 12 years now. And yeah, this is something that really helped me grow and kind of diversify revenue, grow some of my businesses, supplement with additional features, plugins, products, audiences, communities, different types of kind of business paradigms that otherwise we wouldn't have invented internally. And that's why I have Blake here on the show, because I want to talk about B2Bs and the current landscape of B2B and how common it is for B2B companies to not really engage in M&A and in acquiring supplemental businesses to grow their revenue, which is extremely surprising. So first off, and we're definitely going to get there, but tell us a little bit about yourself. How did you start with Flippa? And then we're going to dive into the market dynamics.
Thank you, Mario. I appreciate that. I think the simplest way to explain Flippa is it's a marketplace to buy and sell companies. And so specifically, we look at digital assets and online businesses, and clearly the digital economy is bigger now than it has been in the past and will continue to grow. And therefore, our long-term thesis is that not only these assets are worth something, but there'll be more people who value them over time. My role here is as CEO, obviously, and I've been doing that now for 6 years. Flippa was a bootstrapped, profitable marketplace selling digital assets for a very long time. The founders, prolific marketplace entrepreneurs. They are the same founders of 99 Designs as they are Hired. So they've got, we've got marketplace in our DNA, and marketplaces are really hard to build. Over time, our average transaction value has moved up and to the right. The types of businesses that you see on the platform have matured greatly. And I joined the company 6 years ago to take what was a good quality business with a big vision into a great quality business with an even bigger vision. And, here we are today. We represent, 12 to 13,000 asset sales a year, and the assets are getting bigger and bigger, but there's still opportunities for anyone, regardless of price, to enter the marketplace. And that's probably the most important thing to realize. This is very much M&A, but it's subscale M&A, and it gives people opportunities to enter.
That's a great way to recap it, because when people think of M&A, in most cases, and kind of when I'm talking to executives and B2B founders, they say, well, we don't have $80 million to splurge on a transaction, and we definitely can't afford to buy, a business for $250 million. And that's definitely not what's going on Flippa. And as you said, the size of a deal and kind of both the amount of deals and the average size of a deal are going up. But it doesn't mean that a business cannot buy an asset for 100,000, 500,000, a million, 2, 3, 5 million. And that's something that I definitely want to dive in. We're also going to kind of cover some categories. But since you mentioned the kind of average deal size, and I know that my audience loves numbers, so let's dive a little bit on that. And what are the top categories? What's the average deal size? What's happening on the platform today?
Yep. So let's normalize it a little bit because the data can skew. So let's look at deals up to 5 million because obviously it'll be skewed by some very big transactions. And let's look at deals over 100,000. So the average transaction value is $440,000. Now, I should say that doesn't mean that someone who has a $10,000 budget can't find something of their liking on the platform. They can, but for the purposes of kind of understanding the marketplace dynamics and the types of deals that are moving off the shelves and the types of deals that represent the average strategic buyer, we're talking about deals that are 6 figures and above, and therefore the average transaction value is $440,000. Now, it's probably important to point out that there's kind of 3 types of buyer, Mario. There's someone who we might define as a side hustler, and they are acquiring something that is typically sub $100,000. But importantly, someone who is a side hustler will be going up against an acquisition entrepreneur, and an acquisition entrepreneur will tend to have a slightly longer period of experience with the digital economy. They may have a slightly bigger budget, but you're essentially competing for the same assets. And then from time to time, we're noticing that institutional and strategic investors are coming downstream to buy assets which will help them out in their growth strategy. And they therefore may be someone you are up against. And most people don't realize that. And they're shocked to find out that they may have lost out to someone who has a more sophisticated history of buying businesses or sophisticated history in the M&A landscape. The reality is it operates at scale. So we have buyer intent data. And you mentioned that your community loves data. So there's 800,000 annual searches on Flippa. The 800,000 annual searches are very long tail in nature, but it's dominated by Shopify, Amazon, and Google as platforms, and it's dominated by e-commerce, digital publishing, which is essentially a blog, and SaaS as business models. There is clearly an evolution of the marketplace as the digital economy shifts. And so as more people see YouTube channels as pathways to growth, we've seen good demand for YouTube channels. As more people recognize that AI is something that they need to not only understand, but invest in, we're seeing appetite for AI-based assets. And so Flippa is really a proxy for the way the digital economy feels at any given time.
There's a lot to unpack here, and I'm very grateful for providing the stats and just kind of supplementing the value. The reason I love Flippa, there are multiple reasons, but the 2 main ones are, one of the things that you mentioned is there's a broad spectrum of possible buyers, and they really love businesses that are not super niche, super unique, just positioned to the high enterprise, right?
Yeah.
Because let's say Salesforce. Everyone loves the concept of Salesforce. Salesforce did acquire Slack, by the way, and now they're growing even faster. But Salesforce, if you like Salesforce at work, it's not something you can deploy for your SMB or as a solopreneur. It's just too distant, and it's kind of creating a broad gap between developing and nurturing the next generation of entrepreneurs. With Flippa, my first transactions were probably a couple $100. Many of my transactions are actually in the thousands, so it's definitely not a $400,000 deal per se. My largest one is probably 75 grand or so. And the reason I love it is it provides opportunities to buy a meaningful, sizable business or sell your business, by the way, because we are also getting lots of M&A demand ourselves. And but have the opportunity to also start smaller, have the opportunity to provide additional revenue opportunities even for like even third-party countries or so, being able to build and crunch sites and apps and kind of do the starter work, like even indie hackers and entrepreneurs know that. And once again, provide that opportunity for the higher tier segment. So I love flexible business models that can span from starter, beginners, entrepreneur, side hustler to, hey, there's a $20 million transaction going on here. That's really one of the power plays of Flippa that I really enjoy. And the second thing, and that's kind of also why I'm drilling on data, I'm a big proponent of data myself. That's kind of what I live by. My background is in software engineering, so probably there's no surprise. And I really admire you and the team for putting up the data insights. So I'm just sharing over here. The data insights, it's actually a real-time outlook on kind of search intent, which you also mentioned, the long tail keywords, the kind of leading categories, Shopify being kind of top of it, blog, affiliate, apps, YouTube, and I'm also going to mention YouTube. And we have other categories such as travel, game, AdSense, AI, needless to say, something that's been growing, and I assume is going to grow even in popularity, and some other channels down the road. So it's a pretty broad list. So everyone who kind of wants to understand and kind of find out more and just do the trending search or kind of P&L multiples, this is a spectacular collection that everyone can tap into, understand, and study the M&A market. And that's really building a strong connection to the business as well. So again, I want to make it crystal clear here. Again, it's not a sponsored talk or anything like that. I've been a user for 12 years. I have co-organized 2 of the Flippa meetups here. And I've been working with, again, anyone from solopreneur to M&A companies and even private equities using Flippa to source deals themselves, which is, I believe, is only natural. I've facilitated sales for people in my network, selling blogs and e-commerce sites, for venture capital funds, buying businesses to supplement, like buying audiences, and lots of other transactions that just make sense. And Flippa just happens to be the natural choice for that. And speaking of categories, because once again, we can skew data in both directions equally, and 440 is kind of the average transaction between 100K and 5 million. But there are also new categories more suitable for growing startups, for small and medium enterprises doing anywhere from like 3 million to 20 million a year, and other business categories and segments that are trying to grow through audience insights, through go-to-market strategy on the digital landscape. And you now provide different categories, including newsletters, which is one of my favorite, including YouTube, which is kind of where we're recording right now, including plugins and extensions. And that's really building a more diverse landscape for the types of acquisitions happening in the smaller scale. So tell me a little bit about how did you reach that conclusion? How did you get there? And how's that segment developing now?
Yeah, so let's look at it from the framework of growth first and foremost, because you've got lots of growth leaders listening in and B2B marketers, B2B founders. So from our perspective, we're always looking to expand the marketplace and satisfy the demand. The demand in our context are buyers. So what buyers want. And there's really 3 ways to grow a marketplace. And this doesn't matter whether you're Airbnb or Flippa. New products, new customers, new markets. So when we talk about new customers, that is something that enables us to capitalize on a group of new customers that can capitalize on the existing feature set. And so the existing feature set essentially is an end-to-end feature set that enables you to sell a company. There's matching, that's driven by AI, and then there's a deal room. And inside the deal room, you can obviously negotiate, you can submit a letter of intent, you can sign asset purchase agreements, you can facilitate due diligence, you can ultimately proceed with a payment. That's all there. So if the platform's built and it's a good fit for the digital economy, and we've seen evidence of people buying and selling Shopify stores all the way through to blogs, then what else can that feature set be used for? And it can be used for the representation of other digital assets. And so then, clearly we looked at, well, what are the biggest digital assets in the world? And is there investor sentiment, investor interest? So we looked at our own data insights and we could see where people were going, where we didn't have supply. And we noticed that people were looking for YouTube channels, but we didn't support YouTube channels as a category. So then the option was, well, do you build out the category yourself or do you go and acquire a company who already owns the category? In our case, we built out the category ourselves but then we tapped on the shoulder someone who had had some success, albeit not the ultimate success, building their own marketplace for YouTube channels. So we brought on board Nelson Ferreira, who's the founder of Trust You, which was a YouTube channel marketplace. Newsletters, again, we'd noticed through buyer intent that that was where buyers wanted to go. And we noticed that, clearly the feature set would still be adequate and therefore new customers. So YouTube channels, newsletters, digital agencies, Chrome extensions, plugins, crypto and crypto-oriented assets. And these are a bunch of new categories. Now, we're excited because we've seen very, very early data to suggest that we're on the right track. And if you look at Flippa's 15-year history, we've really only supported 3 to 4 categories. And all of a sudden we have 12. So, we're pretty excited by the growth opportunity there. And it's a good way for B2B marketers and B2B founders to think about how they can expand their own customers or customer sets. Look at your feature set and try to imagine yourself utilizing that feature set for a new customer type. And now some of them are nascent, because I mentioned that the average transaction value over $100,000 was $440,000. Well, the reality is there'll be very few newsletters and very few YouTube channels worth that much. So that's a nascent category, and Flippa's going to have to be brave and have the patience to watch those categories play out. And of course, that's part of our long-term growth strategy. So hopefully that's helpful in thinking through not only obviously how Flippa went through the process, but also how others might think about going through the process.
Yeah, most definitely. And we both know that there are very niche marketplaces for newsletters, for WordPress plugins, for Chrome extensions, for tiny startups and stuff. And while I do appreciate them, and of course I've used some of them as well over the years when I see something suitable, it's really limiting. And as a business executive, as a business founder, as a business growth consultant, it's really impractical to just follow 12 different marketplaces for each category in order to always be on the lookout for a specific business segment and a certain type of business. It just doesn't make sense. What I've been discussing, and I've had some conversations listing on other marketplaces, and I'm like, hey, you need to list on Flippa. And they're like, why? This is a, let's say, WordPress plugins marketplace. And I'm like, well, because there's a very limited and narrow number of people looking at that marketplace, getting whatever 10,000 views a month, and trying to reach the proper audience means that you have to focus on both a financial acquisition and a strategic acquisition. And when you reach to the point where a strategic acquisition is bound to happen, you're bound to expand your horizons and work with businesses that are not necessarily looking for a WordPress plugin or a WordPress theme. And also, as having spent 16 years in WordPress, I've had people listing on Flippa and other marketplaces, and eventually they close on Flippa and say, well, yeah, I just had a broader number of offers. I had different businesses that were not following and tracking these other marketplaces. They happened to be looking for ABC or whatever it is, and that's how they stumbled upon this. They weren't even looking for a theme directory on ThemeForest, for example, right? Yeah. It just happened out of nowhere, essentially. And again, all these categories are something that I do care about. I made an acquisition a couple months ago, probably on Flippa, for a marketing blog, which was more or less a starter site. However, one that boasted over 100,000 Instagram followers. And it also had a growth engine for like engagements and all that stuff. So the reason this was important is I was able to plug that into a network of other real publishing websites and just use this funnel and then cross-post and cross-reference. And Instagram was not a channel that was ever developed. It was a lot easier to use this kind of as a forefront as the promotional engine, and those who get in conversations with other influencers, representation firms, PR firms, and so on Instagram, just because of having that cloud and having kind of that business out there. So in my kind of satellite network of 8 or 9 other small publishers I just plug this in as installing more or less Instagram as a channel and then supplementing the value for all the other businesses. So this is how these categories are really helping out in that case. And that's kind of what's presenting additional opportunities that B2Bs are not really thinking of.
I think the other thing, Mario, to add is the problem with the fragmented, nicheified approach to M&A is that buyers love choice, and buyers will go where there's the most choice. And buyers have an ever moving, changing buy box and mandate. So someone's looking for a YouTube channel one day, and then they're looking for a newsletter the next. But by the way, they didn't search for YouTube channels. They didn't search for newsletters. They searched for travel. And so what they're looking for is all of the different assets, regardless of the asset medium or business model in the travel industry, because their acquisition mandate says amass the largest travel audience you can. And so it's really important that sellers understand you got to go where the demand is. And so not only does Flippa have the demand, but we own the likely demand. So YouTube channel for sale, we own the number one search term. So we're SERP position one. Newsletters for sale, SERP position one. SaaS businesses for sale, SERP position one. E-commerce for sale, SERP position one. Blogs for sale, SERP position one. So the point being is, I'm not trying to brag, I kind of am, but the point is you got to go where the demand is. And Google still, no matter what people say about the Google changes, no matter what people say about the influence of AI, at the moment, they're still controlling demand.
And since you mentioned AI, and obviously it's not a brag if it's true, right? So the fact of the matter is that people know about Flippa, and it comes up organically and naturally at events. And I also want to mention event, by the way, because you had a great tour show out there. But people are not looking for a specific YouTube channel or a newsletter. That definitely rings true. I'm going to provide a couple of examples here. First one is, I was looking into an AI newsletter for sale, and it looked like a great opportunity as something that already has an audience and can grow. However, that AI newsletter was ran by data scientists with very deep niche understanding of the space, and they wanted out of the business. So in terms of an acquisition asset, it was very hard to keep that as a lifestyle, standalone side hustle, additional supplement, passive income business, because even though the category was right, the specific business context was really hard to maintain and very expensive to maintain, and it just didn't make sense. So in many cases, and kind of one of the things that they did was acquiring a traditional funnel business on system or go high level or something like that, with a lead magnet for, let's say, 15,000 prompts available, with a pretty traditional funnel flowing into another newsletter, right? So it was more predictable, easier, set and forget, something you can start running ads to, and then it accomplishes the same purpose. It's going to take a couple months to kind of reach that same level of threshold, but it's much easier to maintain. So I kind of moved from, I'm looking for a newsletter to supplement and grow category, into I'm actually looking into a lead generation funnel, landing page, SaaS, infomercial business that will accomplish the same purpose with less friction. And we are definitely seeing that happening quite a lot. And another example is, I was at an investor conference in October last year, and I was driving with a startup friend who also got funded. And he was building an AI recognition conversion rate optimization business for Amazon. So it was a great SaaS, great founders and kind of mentors and investors and all of that. So we were driving to Greece for the summit, and he said, "Hey, I like the audience. So I'm thinking of, hey, what should I do now? Like, do I need newsletter? Do I need kind of a YouTube host? Do I need..." And he definitely needed the reach. He wanted to grow the collection of kind of businesses using his product. And eventually he ended up attending the local Flippa meetup and said, "Hey, I'm looking for kind of an Amazon affiliate website or so, anywhere from 150 to 250,000, something to acquire to get more, not necessarily customers, but more users of the product, more people just submitting images and asking for optimizations or submitting their blogs so that we can crawl them and get more data," as kind of one of the possible growth channels. So many a time, businesses are looking for growth and scale opportunities without necessarily knowing what is the channel with the highest asymmetric opportunity for growth.
That's exactly right. And it doesn't always have to be the asset which is generating the most revenue. Mm-hmm. It can be the asset which has the most relevant audience for you at the scale that you need it. And I think that some people also get tripped up by falling in love with a particular asset, when in fact what they have to figure out is what they're trying to achieve. So are you trying to achieve growth for your core business that you currently run? Or are you trying to buy something which adds supplemental revenue so that you can sustain a lifestyle? I think that some people get caught up in saying, I desperately want a SaaS business, or I definitely want an AI-based newsletter, or I definitely want a data science-based journal. And in fact, they should think about the core problem they're trying to solve first and foremost. It's a super dynamic marketplace in the sense that we'll see buyers who we think are looking for something and they end up buying something completely different. And it's because if they're a financial buyer, they come in with preconceived views as to what they're going to find. And then they find something else which satisfies their strategy. So they buy something that you completely were surprised by. And then you get others who just wait and wait and wait and wait until the right deal hits their inbox, which matches exactly what their buy box suggests. So, buyers are complex. But, the good news is it's a dynamic marketplace. And so what we've built is in the AI front, just to sort of tap into that topic, is we've built a matching engine. And the good thing about the matching engine is instead of taking into consideration, although it does take this into consideration, instead of taking into consideration just somebody's buy box and what they specifically say, it takes into consideration their behaviors that they exhibit on the platform, which are often different to what they say they're going to do. And then it also matches them up with other buyers who have exhibited similar behaviors. And then it infers that they will do something similar to what that person is going to do or did prior. And so we're doing 425,000 programmatic matches a week.
That's crazy.
So that level of scale enables us to match and find relevant buyers for people who are looking to exit. And that's exactly what people who are looking to exit are looking for.
This definitely presents lots of opportunities for buyers. And one of the things I want to stress on once again is for everyone watching and having pretty dramatic contrast conversations with executive leaders, with founders, with CEOs. And in most cases, whenever you sit on a board or you're in a VC fund or you're a CEO, you have broad enough of a perception of what's going on to get the reality kick and say, hey, we live in different times. It's a different market. We have to adapt and know that. And that's been going on for the past 18 months. But again, most people got the kick over the past 12 months or even past 7 months or so, but they're already aware. And this year they're working in an environment of change, of adaptation, of agility, of flexibility, of augmenting whatever they do. But it's still not everyone. I'd say that 20% of founders, executives are still not going to say necessarily delusional, but still living in 2021, 2022. And that's very wrong. And especially when you go down the stream, direct VPs, directors, managers, the percentage is just growing wider and broader. And people are saying, hey, we still expect the same projections and the same growth rate, the same acquisition rate, the same low churn, the same everything that we had a couple, 2-3 years ago. We see that with hiring too. Some people are just applying with the same expectations they had a couple years ago, even though the market is different, more layoffs. The economy is different overall. And that level of reality check is missing. So what we see here in our portfolio, again, my agency portfolio, my advisory firm, and kind of my other portfolio of businesses, we see major shifts, and sometimes it's changing every 4 to 6 months in behavior, especially companies who have different businesses and different types and different segments, or let's say business directories who also have a social aspect and kind of moving from, hey, the business part isn't making enough money, but the social one, we can do promoted boosts or premium accounts or so. Or then B2B businesses selling wholesale products, then calling and say, hey, the D2C market is growing now, B2B is slower, taking longer to close deals, or, this to note about, we are capped at the amount of revenue we can make, but we're leaving money on the table at the lower segment, so we need to do something there. Or businesses who have making money from affiliate and from sales and from ads and from video and so on, then just moving the kind of shifting the triggers depending on commission rates, conversion rates, EPAs, and lots of other different factors. So we see major disruptive shift, and sometimes it's shifting every, again, 3, 4, 5, 6 months in businesses, successful established businesses who have been on the market for 5, 8, 10, 12 years, understanding the fact that we just live in different times and understanding the fact that growth needs to be different, forecasts need to be different.
Yeah.
The level of operations, the type of offers, the type of niches are completely different from what we're seeing today.
So I reckon it'd be really cool to understand that outside of businesses like OpenAI and NVIDIA, what the real growth rate looked like in 2024 compared to 2023 for, sub $20 million businesses. And I suspect, to your point, it's far lower than it was in 2020 and 2021. CEOs and founders probably know that implicitly, but I don't think that the mainstream market knows that. And I don't think employees of businesses know that. And so therefore their expectations have not shifted downward. I don't know if you agree with me on that, Mario, but that's
100%
perspective. Yeah. And so, we're coming out of one of the more challenging operating climates ever. And then if you think about M&A, we're coming out of one of the most challenging M&A climates ever, certainly since 2008. And so what we've seen at Flippa is that it took about a year for sellers to start to understand that multiples were different now, and buyers' willingness to pay and the number of buyers who would be willing to pay at ask had substantially diminished and dried up. Now, we're lucky because we have so many buyers, we can still find buyers for each business owner. But the reality is, multiples in subscale land were never pegged actually to the multiples you saw in the lower and middle market M&A climates anyway. And so there's had to be this extraordinary strong recalibration between not only is the multiple lower, but the multiple was never as high as you saw in traditional M&A climates anyway, because there's no liquidity like there is in the public markets. You're not investing in a future state. You're investing in the performance of the business on a trailing 12 or trailing 3-year basis. And so there's just always this recalibration. I think people will need to understand that 98% of businesses in the world, or 99% of businesses in the world, are sub $10 million. And so they actually need their own world. And that's why we built the Flippa Data Insights piece, actually, because there's no actual universal analytics suite that covers subscale businesses.
When you said that 98% of businesses are still kind of adapting and adjusting more or less, and there's lack of data, that definitely rings true. And in terms of what the market thinks and kind of what the expectations are, this may be coming from a couple of random businesses such as Carta that say, hey, this is what we see in investment and valuations, but that's pretty much it, right? First, it's limited to Carta clients. Second, it's pretty skewed. It's late. Data's arriving like 4 months later for the quarter. And it isn't providing the right level of perception of data. It's also skewed toward funded startups, which is a lot different from a lot different from bootstraps. Just nothing in comparison with what's happening in real life. And something I mentioned in the previous episode, we spoke with Gary Glazer from Gamera, and he's sold the business to Rubicon, and again, he's pretty well established kind of in the Adobe space. But what we've been discussing is the change of behavior and change of perception is primarily due to macroeconomic factors such as the Fed increasing the interest rates and kind of economy losing up, investors asking for layoffs and year of efficiency and stuff, and changes in the digital landscape, meaning that paid media is more expensive and doesn't convert as well. SEO got a major hit with the helpful content update in September. LinkedIn's algorithm and reach went down dramatically for most people. And all of these indications led to people repositioning and moving to other channels and other segments and other verticals that convert better. And understanding that means that if you have been looking for, hey, we need to do ABC for SEO, like a publishing business, then it no longer rings true. And on the agency side, I would say that probably 70% of our business in 2019, 2020 was publishers and B2B SaaS. And what we saw in 2023 is, hey, knock, knock, SEO is dead. And most publishers relying on SEO had a really tough time. And B2B SaaS went through major layoffs and restructuring due to the lack of unit economics that makes sense. So we had to quickly pivot and kind of just double down on all of our clients in the nonprofit space, in travel and tourism, in education, in other more resilient healthcare, fintech, more resilient spaces that weren't as fluctuating as much in that economy. But most businesses betting on one single racing horse just went underwater. And they had two options, either disappearing off the face of the earth or still selling and becoming part of something bigger, something larger, which is one of the opportunities that Flippa provides here.
Yeah. I think we should labor that point a little bit. So I think Carter reported that in Q1 2024, there were 1,000 fundraising rounds. Okay, so I get it. I only represented Carter and I only represented Q1. But in 2023, there were 5 million new business originations in the US. And so people spend their lives orientating to a data set that is mostly irrelevant for the average business owner. And that comes up a lot for me. You know, you get small business owners who say, yeah, but the valuation of these businesses is X. It's like, yeah, but they're funded businesses. It's different. So, you know, again, I would just labor the point that, you know, subscale M&A actually for the most part revolves around an industry that never received venture funding in the first place.
Ultimately, the vast majority of businesses, probably 8% or so, give or take, have never received funding. And they work as bootstrap, self-funded businesses or through debt or, you know, friends and family credit or mortgages or anything else that's really supplementing the business. So that's why valuations are different on the one hand. The second thing is that valuations in funded businesses are actually not really working as most people are expecting. And as someone who actually saw VC-funded business in Arch, as I joined as a CEO to kind of help restructuring and kind of getting that ready for sale, I can tell you for a fact, working with funds, and also I have a bunch of fund managers and managing partners in my newsletter as well, that ultimately valuations are what someone is ready to pay you at this time because they may see a strategic opportunity to leech on your brand and your kind of PR story, your networking, your connections, and like your pretty much everything else, right? So if someone now buys, let's say, Perplexity or Claude or Show, it's going to be not necessarily because of the revenue they make. It's going to be because of the opportunities, the unique people working there, the specific connections, being based in the Bay Area or so, and like lots of other additives that are increasing the valuation and potentially helping other business position themselves better and generate better opportunities. In reality, if you're buying a newsletter, an agency, an e-commerce business, you're not buying an established, proven brand that's selling itself by an influencer founder who's a top 100 in their specific corresponding category. They're not the Kardashians or they're not Ed Sheeran or someone else. So you're relying on a traditional business that's growing through traditional channels, like once again, paid ads or SEO or so. You may be able to add something on top of that. You may be able to connect it and tap it into a different business and cross-sell and upsell and do bundles. But there's only so much you can do there. And that's why valuations are so skewed. And that's why the data that we see online is so skewed. And the other aspect here is, again, something we discussed in previous episodes, follow the money. Figure out what's the main revenue driver for these businesses. You're never going to go to a real estate broker who's going to tell you, yeah, the market's in crisis. There's a financial recession. Nobody's buying. Architects are not building new construction buildings and blocks and houses and all that. New neighborhoods are not building. You're never going to hear that. It's always, the market's growing with almost the same pace as last year, or like the market's much better than 3 years ago. Why? Because brokers are taking a commission on sales. They're incentivized to sell you, a real estate, whatever it's apartment, house, or show, highest possible valuation because they're taking a percentage of that. So same thing goes for Carta. Same things to some extent goes for Crunchbase. And there's very little incentive on actually providing the right metrics that inform business decisions in the best possible manner. But again, there's a lot to unpack on that. But I want to touch on a couple other things before we kind of wrap up. The first one is events and partnerships, because talking about other businesses and kind of what's the symbiosis between them. I know that you're pretty close with SEMrush and with some other companies out there. I know that you had a great tour. We are also SEMrush agency partner, by the way, the Everything agency. And these opportunities are just incredible. And one of the key reasons why, again, one of the key growth opportunities is through cross-sharing and cross-sharing referrals and some unique deals that don't exist on the market. So how did that happen? How's the event tour generally helping you grow and position the brand even further?
Yeah. So, you and I both know that strategic partnerships mostly don't work. And so where they do work is where you can agree, quid pro quo, where you can agree that there is going to be mutual benefit and a commitment to invest. And often the best ones evolve organically versus, hey, let's go and do a strategic partnership with X because it's going to be fantastic for our brand. That's going to be very difficult to prove out and win at, albeit sometimes you can get lucky. And so for us, it was about what do customers need to be able to showcase the performance of their assets, and what do buyers need to be able to understand the performance of an asset prior to going into more forensic due diligence. And so SEMrush is a trusted brand for analytics on marketing performance. And so we know that buyers wanted to assess these assets by their backlink profiles, by their domain authority, by their keyword performance. And they're essentially trying to understand what was the likelihood of acquiring an asset and winning free traffic. And so the first step of the strategic partnership was really one way. In fact, it wasn't part of the strategic partnership at all. It was, well, Flippa wants to partner with the best to showcase the best data to give their customers what they want. And that started out with us connecting and paying for access to the API. And we therefore can expose SEMrush data and give people that visibility. Now, of course, SEMrush noticed, right? And said, how cool is this? Our brand is all over this mass trafficked website marketplace called Flippa. Who are these guys? What are they doing? Why do they do it? And gee, this is an interesting use case. And so, of course, over time, you develop a relationship, you start to share strategy, you start to understand what's important to them and important for us. And so then it was a function of sort of opt-in access to the module. And if providing opt-in access to the module reduced our cost and gave them leads while benefiting the end customer, then that worked for everyone and was very much a synergistic partnership. And then it was a function of saying, gee, we actually talk to a similar community, don't we? Put together and tell the story. And so the point being is the strategic partnership evolved from something which was beneficial to us to something that's been beneficial for both parties over a long term. And now it includes obviously their sales team, obviously our sales team, obviously their product team, obviously our product team, their marketing team, our marketing team. We come together very regularly. And then you also have ad hoc opportunities. They ask us to speak at their conferences. We ask them to speak at our conferences. It's great. I mean, I would highly encourage everyone to sort of think about the businesses that they are reliant on and how over time they can insert themselves into the conversations that those businesses are having.
What I really love is you alluding with the fact that strategic partnerships normally suck and don't work, because that's 100% true. And one of the reasons I wanted to reveal the story between Flippa and SEMrush was precisely the fact that this one actually works because it was intentional. It was long time in the making through your API integrations. It was mutual, consensual, with equal investment on both ends when starting to do the tour and all of that. And this is what really makes a partnership stand out versus everything else that we see on the market. Another thing, because mostly what we do for businesses is one in any shape or form go to market, which is then supplemented with marketing and with implementation, building tools and all that. But going to events, meeting executives and say, we need to do event marketing, we need to do trade show booths and all that. And everyone who has ever sponsored a trade show knows that it's a 95% sunk cost, and you need to go to like 70 in order to reach the brand awareness where you start selling high ticket deals just through being everywhere. But that means that you need to put, $1.5 million or so for no return whatsoever, maybe one or two small deals, in order to get and elevate to that space. So same goes for how do you go to events? Do you just sponsor? How many people do you send? What do you do there? Like, what sort of swag do you have? Do you take interviews? Like, do you have any games or quizzes or puzzles to engage people and kind of move them further down the funnel? Like so many other different things. Same goes with sponsorship. Same goes with social media. We need to do social media. How? What's the intent? What does the execution look like? What's the game plan? What's the alignment with the ICP? How does that work? We need to do SEO. Why? You need to grow traffic. Well, the easiest way to grow traffic is go top of the funnel. the easiest way to not get any business whatsoever is also do top of the funnel, meaning that there's a clash between we need more leads and kind of higher conversion rates, and we need more traffic, because these are two different segments. Your leads are a very tiny, small segment, a tiny little bit of the market, which means that you're not going to get traffic, which SEO is not really suited for and kind of optimized for. And lots of other different conversations. And that also doubles down on kind of how partnerships work, and the fact that when you're intentional, when you find the right partner, when you're both mutually focused on the same goal, that's really delivering the great value. And kind of as a wrapping thought, again, before we close, and again, appreciate your time. You're staying a little later, but give me a success story, anything that's non-traditional, like a business acquisition that seemed like a business going to flop, or just didn't really seem very intuitive. Can you think of something on top of your head?
Yeah. So I assume you're asking about an acquisition that happened on the platform. Yep. Let's go back to the reason why people buy in the first place. They're trying to achieve something which they are unlikely to be able to achieve themselves. And so I think the best example is probably the acquisition by Live Sport of a blog called Tribal Football. And what's interesting about that is Live Sport is clearly cable TV, clearly sports orientated, clearly European centric. But clearly, for obvious reasons, one of the biggest sports that drives their audience and then no doubt their revenue is football, soccer, right? And so as Live Sport starts to think about how they can attach themselves to a football loving audience, they do like every other company in the world. They start to map out the geographies where they want to penetrate. They start to think about market expansion. They start to think about the easiest way to do that. You and I both know it's hard to enter a new market. So in their case, one of the fastest growing audiences for football is Africa. And so they were able to find an asset that had an enormously strong footprint in the African market. And Tribal Football was just that. Tribal Football was a non-revenue or very little revenue generating blog with a massive audience of Africans consuming football and content. And so Live Sport buys that. And they buy that because they get to access an African audience. They get to access an African audience and then market the Live Sport suite of content, brands, shows, streaming TV services to. And for them, they get to do that at a fairly trivial cost because it's a non-revenue generating asset. There's few other buyers in the world who want it. They, therefore, are one of the only buyers who want it and are willing to pay a reasonable price for an asset which is not revenue generating. And, I thought that was clever by them. And I also thought that it came out of the blue, and it's the power of the Flippa matching, because ultimately you've got a buyer based in Europe. You've got a blog that's built out of Melbourne, Australia, with an audience in Africa. I think that's a cool story of, one, how global the marketplace is for M&A these days. Two, the types of deals that will happen. And three, the fact that strategic buyers are actually interested in micro businesses.
I love strategic acquisitions, and I fully understand that they're the minority of acquisitions out there because most buyers are, let's say, financial or looking into EBITDA and traditional multiples and all that. But some of these strategic deals can provide immense opportunities, and getting the reach of Flippa as a marketplace, kind of getting the highest possible volume of viewers for the business, is just unlocking opportunities for all of these deals. And yeah, I'll leave it with that. Thanks again, Blake, for coming on the show. Really appreciate it. I know how busy you are. Appreciate your time and kind of taking another extra 15 minutes of it as well. Where can people read more about Flippa's value proposition, the data insights? Is there anything else that you want to announce here before we wrap up?
The cool thing, Mario, is that Data Insights is free. It's always on and it's updated every week. So I would highly encourage people to check it out. Flippa.com/data-insights. Flippa.com/data-insights. It's free. Head to flippa.com. You can see it there. And it's a really great way to start. It just enables you to browse the data, consume the data, and understand the marketplace and how it's trending.
That's incredible. I'm going to dive in once again. It's one of the resources that I try to check in monthly at the beginning of the month, just as I do go through like my stock portfolio and kind of do some investing analysis. It's just one of the resources I'm also checking myself. And once again, thanks for your time. Everyone listening, if you have any questions for Blake, please drop them in the comments. If you like the show, hit like. If you want to see more shows, click subscribe, of course. And this has been the B2B Growth Hacking Playbook. Thanks for sticking with us, and see you in the next episode.